NVIDIA, the rally, the entire rally. Everyone's asking, how long will this rally go on? How long will NVIDIA go on? Well, that's not the question. The question should be, how does one protect itself from a correction or a major crash? How do I know when NVIDIA and the other tech stocks are going to crash or correct? How do I get a warning early on that warns me that the S&P is ready to crash? How do I do that? Well, the answer is utility stocks. Now, I'm not talking about buying utility stocks for dividends. Everybody buys utility stocks to get the dividends, which, by the way, in my opinion, is a very bad idea, because all dividend stocks are bad from that point of view, because what people don't realize, dividend stocks, when the market starts to correct or crash, dividend stocks accelerate on the way down much faster than the S&P or the NASDAQ. The worst of the dividend stocks are utility stocks. Everybody's in utility stocks. Planners, brokers, put everybody, especially the older people, in utility stocks. And they got people thinking, you know what, it doesn't matter what the stock does. Even if the stock's going down, it's okay because I got these big, hefty dividend stocks, or dividends. Well, guess what? These dividends are dangerous. But I'm not here to talk to you about dividends. I'm here to talk to you how to use a utility stock to safeguard against a surprise crash or correction. Here, take a look. And I've been doing this with my subscriber for years. You see the red? In the red here, this is, of course, the S&P. Now, what's the blue line? Well, the blue line, that is a utility. That's the utility ETF. Now, just to show you, when utility stocks are going up like this, they serve a purpose. They tell you something. The reason why utility stocks start going up, because the big institutions, when they sense there's going to be a correction, they start piling in the utility stocks for safety. So it gives you a warning, and it always works. It gives you an advance notice. As utility stocks go up, it's going up because money is coming out of the market and going into these safety stocks, the utility stocks with big dividends. And guess what? Right before the market crashed here, the COVID crash, we knew something was up. So we were able to get out of our stocks and set up a short. So when the market went down, we weren't caught. In fact, we were making money shorting. Again, look at this here. When they dropped interest rates down to zero to create this big S&P rally, look at that. But what else was happening? All of a sudden, the utility stocks started to rally. Why? Again, the big institutions were pulling money out of the market and hiding it, if you will, into the utility stocks. Because, see, they pay a big dividend. And when you tell your clients you're pulling them out of the market, putting it into utility stocks with big dividends, they love it. But what they don't tell you is that when the utility stocks start going up, because they're pulling money out and putting it into these utility stocks for safety, they don't tell anybody that. And then again, look what happened here. Same thing happened again, just like back here. Utility stocks gave us a warning, and then bam, look at the crash. Again, we were ready for that crash. Just like here, when the utility stocks were warning us there was going to be a crash, we were ready. So we knew in advance. So let's see what's going on now. Same thing. Utility stocks are starting to climb. So why would we be so lucky that not to think that, wait a minute, if the utility stocks were climbing here, identifying a transition of money out of the S&P into utilities, into safety, we got a crash here. The utility stocks went up again because they're transferring money out of the S&P, we'll say, into safety. We got this crash. So why wouldn't the same thing happen here? It's going to. As these utility stocks continue to go up, it's going to warn us. They're doing the same thing. They're pulling money out of these S&P 500 stocks, and they're putting into the utility stocks with big dividends for safety, just like they did here, just like they did here, see? each case, it works. Now, there's also another chart that I work with my subscribers on, right here. This chart identifies, of course, this is the S&P going up, and this right here are the transports going down. That's a divergence. That tells you a lot. When the S&P is going up and there's a divergence where the transports are going down, that's telling you we're going to have a correction. Why? Because what's happening is when the S&P is going up, think of it this way here, they're manufacturing goods, but they're not delivering them because the economy's bad. So between that divergence and using the other chart correctly, which we'll be more than happy to help you. We've been doing this for over 25 years for our subscribers. Be happy to do it for you. It really works. So you got to play defense. You know, right now, technically and fundamentally, we are in worse shape than when we were leading up to the 1929 crash, 1987 crash, 1999, 2000 crash, the dot-com crash. Our technicals and fundamentals are worse now than when we were going up to the 2008 crash, 2020 COVID crash. That's right. Because even the reason why the market keeps rallying the way it does, keeps going up in spite of all the negative news, inflation and debt and deficits, is because money is going in. There's all this money chasing few stocks. It's dangerous. In the past 113 days, the S&P made 30 all-time new highs. What are you, nuts? And here's why. Because we had a massive amount of money, $1.7 billion each day over those past 113 days, and another $338 billion in stock buybacks over the 113 days. All that money was chasing few stocks. This is keeping this whole market rallying since October 2022 and October 2023, when interest rates are 4.5%, not zero. In other words, you got all these chip stocks, NVIDIA, Broadcom, Micron Technology, feeding the popular cloud stocks, Amazon, Microsoft, and Google. So it's really these six stocks. It's these six stocks that are really driving the entire stock market. So you need to know when that is going to stop. And I promise you, using those two charts will help guide you. So for more information on those charts, other charts, and stocks, all you have to do is click the link in my bio. Look, we've been helping people like you for 25 years here at Phil's Gang, and we'd love to help you. Check it out. See you on the charts.